Bitcoin just did the unthinkable. Bitcoin has officially surpassed Google with a jaw-dropping $1.87 trillion market cap, now worth double Amazon and silver. But what does this actually mean for the future of Bitcoin and for you as an investor? Stick around because we're about to break it all down with real data, bold insights, and the macro forces behind this historic crypto move. Let's go. So, here's the fact. According to Company's market cap, Bitcoin is now the 5th most valuable asset in the world. Yes, behind only giants like Apple, Microsoft, Saudi Aramco, and Nvidia. Let that sink in. Not long ago, Bitcoin was considered speculative, a digital experiment. Today, it has more value than Google, Amazon, and even silver. The precious metal people have trusted for centuries. And it's not just price hype, it's performance. In April, Bitcoin jumped 15%. Meanwhile, the Nasdaq 100 down for 0.5%. That's a huge divergence and a clear signal. Institutional money is flowing into crypto and fast. What's fueling this breakout? The Fed is under fire, with inflation still hot and interest rate decisions wobbling. Trust in fiat is fading. Investors are fleeing the dollar, moving into assets that aren't tied to central banks or political policy. Long-term U.S. bonds just saw their term premium spike to 12-year highs. Historically, that's been bullish for Bitcoin. Even whispers of a Trump-backed Bitcoin reserve are circling in. Confirmed rumor, yes, but one that's spooking traditional markets and exciting the crypto world. This isn't just a price rally, it's a macro shift. Bitcoin is proving itself as a safe haven, right alongside gold. But here's where it gets even more interesting. Bitcoin is harder, faster, leaner than gold. No physical storage, no borders, 24/7 liquidity. Limited supply, only 21 million BTC will ever exist. When markets get spooked, people want freedom with their money. Bitcoin gives them that. No middlemen, no quarterly earnings, just a decentralized, globally accessible asset. Now let's zoom out. The world is printing money everywhere, from the US to Europe. From Japan to emerging markets, liquidity is at all-time highs, and Bitcoin, it feeds off liquidity. Think of Bitcoin as a thermometer for global trust. When central banks print money and debt piles up, Bitcoin spikes. It's not random, it's monetary cause and effect. And don't forget, countries like El Salvador and institutions like BlackRock and Fidelity have already jumped on the Bitcoin bandwagon. This is no longer a fringe asset, it's part of the mainstream conversation. So, is Bitcoin done? Or is it just warming up? Some analysts are eyeing $100,000 and beyond. Others say we're re-entering a Bitcoin supercycle, fueled by global macro shifts and deepening distrust in traditional systems. Combine that with upcoming Bitcoin halving cycles. And historically, these have triggered massive price rallies. The world is changing and Bitcoin is rising with it. But remember, this isn't financial advice. It's a deep dive into what's happening in real time, backed by data and trends. So what do you think? Is Bitcoin the king of assets now? Or are we just getting started? Drop your thoughts in the comments, subscribe for more sharp crypto breakdowns, and as always, do your own research.